The fixed income market was never going to buy Bitcoin, ever. But now they have a product in a wrapper that looks familiar, providing returns that are outpacing everything else that they own. And now it looks attractive. It's like, okay, yeah, why don't I dip my toe in the water and I buy this new product? Because that is going to improve the return and the risk of my entire portfolio. It's a no-brainer.
Hey everyone, welcome back to the show. Joining me this week is the team behind True North. I have Tim Kotzman here live with me in New York City, and joining us remotely are Jeff Walton and Ben Werkman. Thank you guys so much for joining me for the first time. You guys have created such an online community, a very passionate one. I think you had like 200,000 live streams on your chat with Fong Lee and Michael Saylor at the strategy conference. I'm just really impressed by what you guys have built, and I want to learn all about it. So thanks for joining me, guys.
Thanks for having us.
Happy to be here. Yeah,
absolutely. Well, it's going to be fun.
Well, first, let's just start with what is True North? Are you guys a company? You're clearly a media platform with your podcast. Like, what is True North and what are the origins? Jeff, you founded it, right?
Yeah. So maybe I'll just take it back and do a quick origin story. So, this last year, myself, Ben, Tim, and the rest of the team, the True North team, which is comprised of about 10 to 12 people at the moment, we were all talking about what was going on with strategy, MicroStrategy. We thought it was a really big story. We thought it was wildly underappreciated from the market, understanding how this new capital was coming in the door from IBIT. And we had been in communication with each other for pretty much all of 2024. And then I realized in October, as the energy started to shift and it looked like MSTR was going to break into price discovery, this was going to be a situation that needed some guidance. I had been part of the GameStop trade back in 2021 when there was significant frenzy and everybody was following Roaring Kitty and everything that was going on that front. But I saw a really big problem there with Roaring Kitty is that there was one person. There was one person that the entire community relied on. And I was like, oh my God, a similar type situation. I think there's going to be mania here on the horizon, but I think this is sustainable mania because it's got Bitcoin as a base underlying MSTR moving into the future. So I thought it would be really valuable to put together a group of people that have been at the front of this trade to communicate with the entire market and be a beacon of true information, because I knew there was going to be significant FUD coming into the market, or fear, uncertainty, and doubt from, paid platforms, people that are shorting the stock, or, all of these different things. So the goal was to be a consistent, true source of information for the market. And we were already having these conversations internally. We just decided, let's just broadcast it externally so we can share this information and education that we're all learning together at the same time. And we'll just broadcast it to a wider audience. And given that the trade itself is very complicated and very structured finance, you need a lot of different backgrounds. The group is comprised and constructed of people with different backgrounds and different perspectives. So it gives this really well-rounded view of what's happening in the marketplace right now. And so, we created this group, True North, and True North is effectively started as a little investment club media podcast group. And now we have a C Corp, and we're doing, events and getting on the podcast circuit and getting involved in these Bitcoin Treasury companies. So who knows exactly what that will be in the future, but we're just kind of building the plane as it flies.
It's really incredible. I mean, as someone who also built my career basically from Bitcoin Twitter and creating a podcast and a media channel independently, it's awesome to see others doing it as well. And so really you were focused on trading this specific security, this specific equity. You were passionate about MSTR. How much would you guys share? And I mean, it couldn't have all been perfect, right? I mean, I know you timed this right in the bear market and the depths of the bear market. I'm sure so many people have come up to you saying, hey, thanks so much. My life has changed. I'm now financially able to retire or whatever. That's what a lot of people were saying at the strategy conference. But what was that journey like on the way? You're just opening up your books and talking about the trades?
Yeah, I could take that one. It was a really interesting journey for a lot of us because what we decided to do is just be as transparent as we possibly could and talk about exactly how we saw this. And there was no misunderstanding that we were all very directionally long. Right? We were all Bitcoiners to begin with, and we all saw this as a trade that was going to accelerate and be able to generate returns for us beyond what Bitcoin does. But that doesn't mean it's a smooth ride. when you've got a company that completely abandons the thought process of having volatility as a risk you need to strip out of your business and embraces it, it means that this thing might be going up directionally, but it can be a jagged line on the way to get there. And when you start a group like this and you're very public about it, that can become really challenging because we had some times, you look back in November when it had that real blow off top up into the 500s and then it came down. Sometimes you get a very different reaction from people in the community than you did during the ride up.
Well, and you
So
could
you've
get
got to be
blamed,
willing,
right? You could get blamed for people losing
for
money
sure.
because they listened to you guys.
Absolutely. And what we've always tried to do is not tell anyone how to invest. We decided when we started covering these companies that we would cover the thesis. We would look at what companies were doing different. So, what made a good Bitcoin treasury company versus which ones might drag a little bit. And we started really looking at what's the long-term trajectory? What does it mean to have this huge pile of permanent capital on your balance sheet? What optionality does that give you for the future? What are the opportunities here? Because we view this as a decade-long investment. We don't really view this as a trade, which is why we've all continued to keep our time horizon much further out there. So we're not focusing on weekly movements or even really monthly movements. We're focused on where these companies are going to be in a decade, and you're starting to see what that separation is going to look like. And that's what I think the community has really rallied around us for, is that we've remained very consistent. We try to call things out when we see things changing in the market, but we have a directional long thesis on Bitcoin being integrated into the financial system here in the world. And because of that, it keeps us really engaged. And with strategy having such a huge lead at scale, that's who you want to be covering because they're making the moves first.
And we really try to create a valuation framework around this, right? Because a lot of people are trying to figure out like, okay, well, how do you value any of these companies? And people are starting with, well, it should be valued at just its Bitcoin holdings. It's like, well, there's actually a lot more there, and you kind of have to unpack and look at how all equities are valued, right? How are the other equities in the entire market valued? Because you could take some similar framework of that and apply it to these companies and start to reshape the current thinking of the entire market.
Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for more than 7 years, have over $10 billion in client assets, and a team of 100 plus. Their weekly newsletter is a must read. It's written by their CIO, Matt Hogan, one of the best minds in the business. I highly recommend it. It's witty, bold, and quick. Takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. And always, of course, carefully consider the extreme risks associated with crypto. So what makes a good Bitcoin treasury company? What types of metrics are you guys looking at, and how do you value these companies as more and more are coming up on basically a weekly basis?
It is coming out a lot. I mean, there's a lot of excitement in this area. And I think that the market actually thinks that there's far more of these than there are. I mean, if you look at all the companies that are entering the market, none of them are really even operating at scale other than strategy, right? There's really only one giant in this space. So while you hear a lot of names, people seem to think the market's saturated. But when you actually look at the amount of capital being deployed in the grand scheme of the financial markets, it's very little. But what I think is really separating a lot of these companies is conviction, execution, and messaging. What's very clear in this, everyone understands the value in incrementing that Bitcoin per share. Jeff was talking about it with Dylan about it effectively being a Bitcoin dividend automatically reinvested in a tax advantaged way. It's kind of how people can think about Bitcoin per share. So the market has really digested the value and the growth and the trajectory, the velocity at which you're growing that Bitcoin per share. But what's separating a lot of these companies is the way that they're messaging it. So when you look at a company like Strategy or like MetaPlanet, those executives are out in front of their investors constantly. And they're explaining the transactions they're taking. They're telling you why this is beneficial. They're putting ambitious targets out there in front of themselves that they're trying to achieve. And then they're constantly showing their progression towards achieving those. So with Strategy, you see an announcement every Monday. We all look for it. We look for it on Sunday when they hint that there's an announcement coming on Monday, and then you see how much Bitcoin they bought. When a company does that, it allows the investing community to stay really engaged and to constantly be tracking their progress and look at the velocity at which they're achieving their goals. And that's what drives the premiums. If you look at a company like MetaPlanet that's trading at like a 9 times to NAV, multiple to NAV, that's significant, but they're getting rewarded because the market's seeing the speed at which they're delivering on their promises. And that's really huge in this. And so having that management team that's out in front of the market constantly, providing the updates, showing that they're thinking out of the box, but also showing that they're thinking in a way that makes the company resilient over the long term, because every company can do good as a Bitcoin treasury during a bull market. You
Right.
need to see them building the framework for a bear market.
No, that's absolutely true. I want to ask about what you anticipate in maybe the next big downturn cycle. But first, let's zoom in on that mNAV. I think it's really crucial. A lot of people are paying attention to it. Some of the companies are trading at a massive premium, some at a discount, some right at par. Can you maybe break down that metric? Some of the people who watch my show and follow are maybe a little newer to some of this finance jargon. So can you break down what an mNAV is and how you're evaluating the companies based on their mNAV?
So I'll let Ben or Jeff kind of break it down, but just a little note. To the best of my knowledge, Jeff and Ryan actually kind of popularized like mNAV.
Oh,
like
really?
it's not something that traditionally people just run around and say mNAV this, mNAV that. And some of the strategy executives actually said like, hey, when we put this on the new strategy website, like mNAV is there because of these guys.
Wow.
So like, props to Jeff and Ryan. Props to Jeff for, I mean, Jeff last fall sent out like this manifesto or this thesis or this call to action about True North. And it, I won't go into the whole story, but when I got it, I literally had my significant other like read it out loud on a car ride. I'm like, she's like, I don't want to read this out loud. I'm uncomfortable doing that. I'm like, I'm the only person here. Just read it out loud. Like, I think this is going to be really important. Like, that's how like significantly it hit me.
Wow.
And then like Ben, I love like, for me, Ben is known as like investing is an individual sport, but research is a team sport. And that's what True North is. And I don't know. I don't want to get emotional, but this is just a very special thing. And I think that authenticity, like nobody's perfect, but I think that authenticity just really shines through. And, if you can't already tell, like with Jeff's personality, like he's like a natural born leader. Like people want to be in the group. I've had people on individual calls say, I know it's too late, but if I ever had the chance to be on the True North team, like that would mean that like I would be so excited to be a part of True North. Like it's pretty cool.
Is it too late? I mean, your team's expanding, right?
I mean that's a question for Jeff.
All right. Well, Jeff, I guess did you coin this mNAV?
Yeah, I guess I kind of did. It was part of my original thesis that I put together back in 2022, 2023 of like, how do you start valuing these companies? And I was looking at it from this lens of insurance. And it's actually a very common framework for valuing insurance companies. You look at this like price to book ratio, which is a function of the assets less the liabilities that they've got on their balance sheet, and what insurance companies generally trade at a multiple to that kind of book value. So I took a similar framework, and then I tried to like smash it together with how to price other equity companies. And that's where I came to this multiple of net asset value. So the multiple of net asset value is the assets held on the balance sheet less the debt. And it's the market cap that the company is trading at divided by the net asset, the net asset value. And that gives you the multiple. So for example, Strategy today is trading at $110 billion. They have $10 billion of debt, and they've got $60 billion of assets held on their balance sheet. So they're trading at, I don't know, 1.8 mNAV or something like that.
Which is lower than it's been.
Which is lower than it's been. Yeah. Mm-hmm. So my thought here was being, all right, well, like, how can I compare that to other equities in the market, right? If I were to take the same, financial strength framework of Strategy, and I were to apply that and look at other equities in the market, other very popular equities in the market, like NVIDIA, NVIDIA is trading at a 50 times mNAV.
Let's go 50 mNAV.
So is that a good thing?
Well, there's multiple components that kind of come into play here. It's with NVIDIA or any of these other popular tech companies that are trading at significant multiples to mNAV. Obviously, there's a cash flow component that comes into play as well. But ultimately, the framework that I took into this was, what is an equity worth? Like, what is the value of holding any equity? Is it the earnings? Is it its ability to grow? And I take a step back and I look at Bitcoin and I think, well, okay, if it's earnings and its ability to grow, I think Bitcoin is going to grow faster than anything else on the planet. Maybe compete with AI, but um, and if I'm going to have ability to continue to grow that Bitcoin per share, plus I get the underlying price appreciation, I think it should probably be treated similarly to some of these larger tech companies. And when I went through the GameStop frenzy and mania, GameStop hit a mNAV of 49. So it was trading at 49 times its actual financial strength in the peak of 2021. And I was like, okay, well that's what mania may look like. Okay, so how do I apply the same framework? And so I started coming up with this just general valuation framework using mNAV, and now it's been adopted and blown into just a bunch of different data points. Now there's months to cover mNAV and all these other different ways to try to potentially value these things. And I think it's a decent starting point of understanding what like market sentiment might be on the stock, like long-term market sentiment. And in order to kind of increase mNAV or like increase potential valuations, there's a few things that come to mind. Like how fast are you increasing your Bitcoin per share? Like what's the market sentiment on your stock? What's your operating business and cash flow? Do you have an operating business and cash flow? Are you offering unique products to the market that's tapping a unique pool of capital? Because how I view strategy here, strategy is like this huge icon that's like lifting the floor of the entire industry. And they're really hyper laser focused on the fixed income market.
Mm-hmm.
Right? They're going to go tackle 1% of the fixed income market. And that's like what they're hyper laser focused on with their preferred instruments.
Yep.
Now that lifts the floor for all of these other companies to go tackle different pools of capital in the world, right? In order for strategy to be successful, they need to focus on one thing and that one thing. And that gives this opportunity for companies like, Semler to go approach the healthcare market, or Nakamoto to go into hedge funds, or, Asset to go into biotech, or all these other different realms. And I think that's where a lot of the opportunity lies for some of these companies.
I think it was a shift for a lot of people in the way that you think about valuing businesses. And I talk about it a lot more in the way that people look at their own personal financial lives, because I think it's easier to conceptualize, where in the early days, you're focused almost entirely on increasing your salary, right? Everyone's looking for promotions. They want that increase to their salary. It brings them more money. They can save more money. But over time, as you've increased that salary and you've saved that money and you're growing assets on your balance sheet, there becomes a point where the highest return you're going to get is from actively deploying the money you've saved. And that's effectively what strategy did. They built a good business for a long time. They built up a significant cash balance. When they started this, they had about $500 million in cash, but the business had slowed down. They're competing with giants like Microsoft. And so they needed to take the focus away from doing everything possible they could do to increase the top line, their revenues, their profits. And they decided to take what was a strong business, but use the asset they built by having that strong business, which was their balance sheet. And that became the mechanism by which they were going to be able to generate the most value for their shareholders. So it's that shift from when you focus on your income to when you're focusing on your net worth, right? You're trying to deploy your own personal balance sheet to grow your net worth. That's effectively what strategy and a lot of these other treasury companies are doing themselves. But because of that, because there was that shift in focus, particularly in the early days, away from that original operating business, people had a tough time putting a standard valuation model to it. And that's why I think that it started to become an asset-based valuation model, like Jeff just described a minute ago, that really took over the market because it became a simple concept that people could grasp in order to make sense of all the transactions that were happening. And I think you're going to see differentiation that comes in this market as you start to see like growth companies emerge in this market with an active treasury, which is going to create differentiation for investors where they can tailor their portfolio to their particular flavor of treasury company.
Well, that's exactly what I wanted to ask next. How can these companies differentiate themselves? Because you can always buy spot Bitcoin. And if you want exposure, you want the equity version, you have MSTR that's outperformed literally everything. And I love those charts that Michael shares of, MicroStrategy or Strategy Now's performance compared to pretty much everything else, like the FANGs, Magnificent Seven, bonds, obviously underwater. But how can these companies differentiate and compete?
I mean, I think every company would do well to at least consider the example that Michael Saylor has given with the preferred products, in particular Stride, right? And he said this himself, that depending on what the different market conditions are, let's say the price is going down, they could sell the Stride product at the market, buy back the stock, and not have to sell the Bitcoin. So in my mind, Jeff saying like you need to be laser focused on one thing, in my humble opinion, every Bitcoin treasury company would do well to consider how are you going to get a Stride-like product for your company to the market, trading liquid with an ATM on it before you get the next downturn, whether it's 20%, 40%, 30%, because at scale, everything's good for Bitcoin, but if you can go from we're going to buy Bitcoin or sell Bitcoin in order to maximize Bitcoin per share to we're never going to sell Bitcoin, I think that would be a huge advantage.
But in order to get to that preferred instrument level, you have to have a lot of liquidity, right? How do you get there?
Over to you guys.
Yeah, there's definitely a ramping period here as these companies achieve scale. And I think a lot of these companies are going to look very similar in the early days, right? The market's really digested the sale of equity and when that's accretive to the shareholders, right? Arbitraging that premium between the market value of your equity and the net asset value on your balance sheet. That one's very understandable. People now understand the convertible bond market in a way I think most of us never intended to understand the convertible bond market. It's been an amazing education. But that gives you the ability to raise capital at a premium even to where your stock is trading. So it's even more accretive. And now you're starting to see the next evolutions of these, which is these preferred instruments where you're getting, like a 7-to-1 type of a ratio in terms of how much accretion you're getting to your core shareholders. But in the early days, I really do believe that a lot of this is about the messaging and the execution using just those core tools. I don't think a lot of companies are going to have to get too exotic in the way that they approach this strategy. They can use their core business as a differentiator for themselves. So if you do have one of these strong cash flowing businesses, that brings you opportunities that companies without that do not have. So for instance, you can be acquiring Bitcoin on its own, just full accretive, right? If it's purely coming from the cash flow of the business, that's purely accretive to the shareholders and to the Bitcoin per share metric. But you also see companies like Metaplanet doing some interesting things where they're actually saying, if our goal is to accumulate Bitcoin, we're going to use derivatives as a way to do that while generating additional cash to buy Bitcoin with. So what they're doing is they're selling cash secured puts on Bitcoin. And for people that may not know what that means, it basically means you're pledging cash saying, I will buy Bitcoin at this price. You're locked into a contract. You collect a premium for selling that contract to someone. So that's new cash coming into the business. And now if Bitcoin goes below the price you agreed to, you're just buying that Bitcoin with the cash, which is the strategy anyways. But in the meantime, you've generated extra cash through that premium where you can buy more Bitcoin. And that actually flows through to your financials as well. So you're showing strength in the operating business and you're showing creativity in how you're going to accumulate more Bitcoin for your shareholders. So there's those little tweaks that people can make to this strategy to set themselves apart from some of the bigger companies. Strategy itself, and it's going to get very confusing because we keep saying strategy, but I think people know what we mean. MSTR itself, they've kept themselves very pure in this space. And they did that intentionally because if you build trust in the capital markets, other companies can build within your ecosystem. So if you think about all the ETFs that are out there and all the products that are popping up, those are major drivers of liquidity into your market. So there's a significant amount of value in just stating what you're going to do and doing exactly that, not wavering, not trying to get too creative in terms of how you're generating revenue for your core business, just executing. And with strategy, you've seen that bring, I think between those ETFs, there's got to be something close to 10 billion across all of them now that are bringing liquidity into their ecosystem. So new companies coming out of the gate, I think you have to evaluate your core operating business at the beginning, figure out what gives you a competitive advantage or at least a messaging advantage into the market. But then you've got to be completely transparent in how you're going to execute, and you need to be showing the investors that you're making progress every day, that this truly is a focus for you and not a hobby for your business.
Can you guys maybe break down in a simple way for an audience that maybe isn't experts in finance, really what these new products from Strategy are, Strife, Strike, and Stride, in a way that mainstream audience can understand?
Yeah, maybe I'll take that one and walk through that. And to hit on that last point a little bit with Ben's commentary, there is having a toolkit and communicating the message, right? You got to have a toolkit of either operating business or these other instruments that you're offering to the market, but also somebody that's out in the market talking about what exactly you're doing and being transparent and just pounding that message really consistently, so the market can organically start talking about it, right? I think a lot of what's happening with strategy is a function of people just talking about what's going on here on X, and that just going further and further. And the fact that we started True North, now there's like little one-off podcasts on each one of these individual Bitcoin treasury companies doing analysis on everything that's going on there. So like getting the message out there and being transparent about that message is incredibly important, not to be understated. But getting into these preferred equity instruments, which I think are incredibly valuable, is really the key unlock here of having this Bitcoin held on your balance sheet and holding Bitcoin as collateral, right? The Bitcoin that you hold on your balance sheet is collateral for these preferred equity instruments effectively. So what does that mean? Basically you have a capital stack, right? So in the event of a bankruptcy or liquidation, your debtors get paid out first and your equity holders get paid out last. So basically you could think of it as a risk profile, like a risk tranching mechanism. So anybody that's a senior in the capital stack is furthest away from risk. They will get paid out first in the event of a bankruptcy or liquidation. Anybody that's junior on the capital stack, equity holders, they get paid out last. So what they've done is they've monetized the capital stack and their position within the capital stack to effectively create different risk return instruments that they can offer to the capital markets. And so the first instrument, STRF, is the most senior with the exception of the convertible bonds. So convertible bonds are the most senior. And you have STRF, which is a preferred equity instrument that's paying $10 per share annually, perpetually into the future. So, forever, paying $10 per share. And so if anybody's buying that instrument, or the people that bought that instrument on the IPO, that capital came into Strategy, they were able to buy Bitcoin with that capital. And those people that have those shares can hold those shares into perpetuity. And they now have a shelf registration ATM, so they can issue more shares of that instrument to the market when there's significant demand and bring in more capital to buy more Bitcoin. So that's instrument number one. Now you go further down in the capital stack and you have instrument number two, which is STRK, which is a bit more complicated. This was, I think, the first instrument that was ever issued to the market that was developed and created with AI. So it's a little bit complex. And shout out to the strategy team for leveraging AI and creating something so quickly. That's just a beautiful instrument. And this is a convertible perpetual preferred equity. It pays you $8 per share into perpetuity, but every 10 shares of STRK can convert into 1 share of MSTR. So when this product is priced within the market, this convertibility feature is effectively a call option on the stock once the stock hits above $1,000. So as the price of the underlying stock moves or appreciates, the price of STRK will appreciate. And what the dividend does, the annualized dividend, what that does is effectively sets a price floor for the preferred equity. Because as the price of the underlying MSTR may go down, or the price of the equity goes down, that would drive the yield higher. So if the price of STRK goes down, the technical yield, $8 per share yield, actually goes higher. So then there would be arbitrage opportunity for anybody looking for higher yields to come into the market, which would push the stock price up. So it effectively sets this price floor for that STRK instrument. So that's product number two. So you've got STRF, senior, flat dividend, no convertibility. STRK, it's kind of in the middle. It is convertible and in the middle of the capital stack. And now you have the bottom one, which is STRD. STRD is effectively like this junk bond status. Technically, it's the lowest on the capital stack, and it pays $10 per share perpetually into the future. However, those dividends are non-cumulative dividends. So in the event that they weren't able to pay the dividend, like the dividend that they would owe wouldn't accumulate. And what that feature does is effectively just makes it technically more risky. And so that's why it sits junior on the capital stack. It's technically more risky. And in the circumstance of, let's just say a down market, MSTR would be able to issue more STRD, like their more junk bond status instrument, and still protect the capital stack of their more senior instruments, STRF and STRK. Because any capital that they bring in the door, they're buying Bitcoin with it, and it improves the underlying balance sheet of all of the instruments.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. Up next, Bitkey. Bitkey is a Bitcoin hardware wallet with multi-sig security, inheritance, and a recovery system designed for real life. No complex setup, no seed phrase, just true self-custody without the stress. It was named one of Time's best inventions in 2024. Use code STORIES for 20% off at bitkey.world. Next up, the Bitcoin way. Bitcoin is only freedom money if you control it fully. The Bitcoin Way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. Want to reach millions of Bitcoin users? Speed Wallet makes it easy. Launch your app on Speed's mini app store. Publish your app in hours, no coding needed. You can also accept Bitcoin payments effortlessly with Speed. Ready to grow? Publish on Speed today. Visit Speed.app. How revolutionary are these products? And what is like the greater market really missing?
Yeah, they're incredibly revolutionary.
Yeah.
And they're going to target a huge portion of the market that I don't think people are ready for. So just think about your traditional portfolio, right? 60% equities, 40% bonds. If you could go and be high on the capital structure, meaning you're low risk and you can be low volatility, not everyone wants the volatility that Bitcoin brings. So a product like STRF is really more tied to the cash it's providing. The yield that that product is providing is how that one gets its value. So if you're holding a bond portfolio and maybe you're holding junk bonds because you want higher yields in that 40% part of your portfolio, well, now you can go over and you can get something that's paying you $10 a share, a 10% yield at par, that's higher on the capital structure of a company that's 6-to-1 over collateralized. That's a huge shift. You can de-risk your portfolio and increase the income in that portfolio. So they're going after a major segment of the market. Preferred equity used to be like a last-ditch effort to save companies, was kind of how they would get issued. And now they're using it as a proactive tool to make themselves resilient in the event of bear markets. It also has the ability for them to have those product values go up in the event that rates get lowered, because now those yields become more valuable in the marketplace. So if you think rates are going down, you can actually get some capital appreciation alongside of these. It's incredibly forward thinking what he's doing, and they're being incredibly methodical about which areas of the market that they're targeting, because they've been moving incrementally higher in the amount of capital available to be absorbed by each of these products they're offering now.
So what do you guys say to the critics? I mean, anytime you turn on CNBC, there's someone who says this is all a bubble. And now we're seeing so many corporate treasury companies come up that people are worried that it's a little bit frothy. And how do you evaluate this? What do you say to the critics of these types of strategies?
So this is a great question, right? So a lot of the critics come out and say that, strategies taking on piles and piles of debt, mounds and mounds of debt. but they don't actually go and do the math and look at the numbers and look at the balance sheet and look at the actual statistics that Strategy is providing on their website. Like you can go see the collateralized nature of all of these individual products 24/7, 365. And the instruments that they've got right now, like STRF is 6 times over collateralized, and it's paying a effective 9% yield in the market. And you think about the landscape of these products, and Ben, you kind of hit on this, right? The fixed income market is $318 trillion. This is the first time that the fixed income market has had product market fit for another instrument that they could buy. The fixed income market was never going to buy Bitcoin, ever, ever. But now they have a product in a wrapper that looks familiar, providing returns that are outpacing everything else that they own. And now it looks attractive. It's like, okay, yeah, why don't I dip my toe in the water and I buy this new product? Because that is going to improve the return and the risk of my entire portfolio. It's a no-brainer. And what will happen here is the rest of the market, the fixed income market, and even probably part of the real estate market, these products are too good not to own in your portfolio. And I think there's going to be a situation where, the fixed income money managers that they're buying and using these products are going to start outperforming all of their competitors. And that capital is going to move to where it's performing best. And so I think that's going to bring a landslide of capital in the door here. And just to put it on a level playing field, Boeing preferred stock is paying 4.5% yield. PG&E preferred stock is paying 6.5% yield.
Wow.
And you think about like, oh my God, what are the risks? Okay, well, planes are flying or like falling out of the air. And, wildfires are being started by all these utility companies in California. Like, oh my God, there's so much physical risk on these instruments over here. And now you've got this other instrument over here that's 6 times over collateralized and the risk is digital. This starts to look a lot better when you start to compare these instruments. So I think there's going to be a landslide of capital when these things get repriced. Part of that is credit rating agencies wrapping their heads around like, what are these products? What is Bitcoin? That's going to take some time. But getting back to this question of risk, like what is the risk here? The risk is, not managing the collateralization of your balance sheet appropriately and the potential volatility of Bitcoin and how that moves into the future. And I mean, Strategy's leverage ratio right now is like 15%. I think they're probably one of the least risky equities in the entire equity market from a leverage ratio perspective. And they have ability to crank that up within historical Bitcoin volatility. So they've got a toolkit. They now have all these tools that they can use at different periods of time. They've got ATMs on all of these different instruments where they can capitalize on different pools of capital depending on whatever's happening in the market. Interest rates drop. Cool. I'm going to use this instrument and, capital is going to come in the door here and I want to capitalize on that. Or, they can include in the S&P 500 MSTR rockets. They're able to use that ATM and, pull in capital over here. So you've got this, quadruple threat ATM situation where you could bring capital in the door from many different places. And a worst case scenario, you can always refinance the debt, right? Like if the price of Bitcoin falls 50% from here, Strategy still has $30 billion of assets and $10 billion of debt. I would underwrite that loan all day, every day. Right? That's still an incredibly strong company. So that's the way I look at it.
So you guys are obviously still incredibly bullish on MSTR. What other corporate Bitcoin treasury companies are you most bullish on?
Well, I was just going to mention, speaking of the preferred market, the bond market, what happens when this happens in every capital market? As Dylan has mentioned, there's, I believe, 4 preferred stocks in Japan. 2 of them are offered by SoftBank, and the average interest rate is 2%. So we're just talking about 8, 9, 10%. What happens if you just go to Japan and offer 2.5% or 3%, right? Throw them a bone. Or double it, right? Yeah. I think through these products as like at least 4 stages. 1, are you aware of it? 2, do you understand it? 3, do you appreciate it, right? Like you can know about Bitcoin, then you could understand Bitcoin. Do you appreciate Bitcoin? And then you can buy Bitcoin. You could add at least 2 more when you think about like that the ETFs in the US still aren't available to some people, right? Through their brokerage account. You could add at least 2 more to that. So are you aware of it? Do you understand it? Do you appreciate it? are you even allowed to buy it, right? Is there something blocking you from buying it? Is it rated? Are the credit rating agencies actually rating it, which would make more people want to buy it? And then step 6, like actually buy it. So I think thinking through these things and giving the examples that Jeff gave about real world examples of comparing it to other equities or other products is super helpful.
Sure. So which companies are you guys most bullish on?
Yeah, I'll tell you, the companies I get very bullish on are the ones I see doing regular execution on this, right? So Metaplanet has been one that's executed extremely well in this space recently. I think when you've got a very public team like that, that's constantly pushing and finding ways to raise money and buy Bitcoin, that's incredibly attractive. And you've been seeing them get a huge amount of attention through social media as well. But there's going to be a lot of companies in this space pretty soon. And there's been a lot of announcement recently, but not a lot of them have actually hit the market to be able to execute on the strategy yet. But when you look at this industry overall, you're really looking for who's good risk managers, right? Who understands those downsides Jeff said, right? If you see people start taking term loans from banks, you need to start getting very nervous because it means they've effectively taken their future out of their own hands. You could now be liquidated by market moves. And when Strategy did that early on, that made me nervous. I started out in commercial distressed credit. It was a big problem for me when they did that. Getting away from that, de-risk the trade in a big way. But I look at this trade very simply from a corporate perspective. I'm just taking the opposite side of the US dollar trade. If they're out here telling me that over time they're going to be super happy if they can just devalue the dollar 2 to 3%, which we know is not the real number, it's much higher than that. And if they want to try to keep prices looking somewhat stable, then you know that they're going to be playing with the supply. And so if I want the other side of that trade, I need to find something with a completely fixed supply, totally inelastic to the demand for it. Because in that scenario, the only thing that can give is the price. And so I view all the companies that are coming into the space, and I would want to encourage companies to look at Bitcoin treasuries, not because you have to be one of the leveraged plays in the market. I think those are very exciting right now because it's that active accumulation of permanent capital. The companies that are doing this over the long run are going to have the strongest balance sheet, which builds you all the optionality for your future. But even if you're just a normal operating company and you don't want to go hit the capital markets to raise money and buy Bitcoin and make Bitcoin per share your KPI, that's okay. Just hardening your balance sheet with Bitcoin can be all the competitive advantage you need. If we get the 30% compound annual growth rate of Bitcoin and you are the only company in your competitor group that puts Bitcoin on your balance sheet, you look a decade down the road, you're probably the consolidator of that industry. It's going to make you a more powerful business. So I think Bitcoin has a place on all corporate balance sheets. And I think that the further down this path with the US dollar and the inflationary environment, I think that this is going to become so apparent. Right now, the leveraged Bitcoin equities are the ones getting all the attention because performance breeds interest. And we've seen a lot of equity performance over the last year. So it's bringing a lot of attention and a lot of capital in. But the big story here is really that transformation of the corporate balance sheet. If you look at Strategy, if they end up with, $300, $400, $500 billion of unencumbered capital on the balance sheet, what can you do with that? Well, go look at how many companies in the S&P 500 have market caps of $4 or $5 or $600 billion. You have the ultimate in optionality. So I think for any company, evaluating Bitcoin is a great step. And it makes me much more bullish just if they have it on the balance sheet, because I know what that means for the future of those companies.
Yeah, because for so long, capital has just been grossly mispriced. And, my shirt says fix the money, but now what Michael's saying is Bitcoin fixed the money. Now you got to fix the capital markets. So that's the next step. What companies are you guys bullish on? Jeff, Tim?
Yeah, I'm looking at all of them, and I think they're all really interesting for their own little categories. And I kind of view this from the lens of a financial capital allocation manager, right? They all have their different risk return metrics. So, I think weighting is incredibly important. And for me, when I just zoom out and think about the environment as a whole, Strategy is on its own. It's in its own stratosphere, right? Like their moat is so big relative to the next. They have 10x the amount of Bitcoin than the next closest company, and they've got 3 times the top 20 companies combined. So they're just on a world of their own. kind of leading the charge. But I think all of them are pretty interesting. I mean, as Ben mentioned, Metaplanet, the relentless execution that they've got going on there, and some serious energy flow uh, from the like X market community. We're in this digital gold rush. So like getting as much in the door, as much Bitcoin in the door right now is just incredibly important. But I think what will be the really interesting sentiment shift and how this is all managed into the future is like risk management and bear market potential and what like who does well in a bear market. And I think that will be fascinating to see how this plays out. And maybe there's not like the 80% drawdowns that we've seen in the past. Maybe there's 55, 65% drawdowns, but the companies that have like really solid operating businesses or, risk management strategies, like planning for situations like this are going to be the ones that are going to be accumulate at a faster rate at those different market times. So I think, having pieces of all of them makes sense because they're going to effectively, they can kind of diversify each other even within a fully Bitcoin denominated portfolio. So kind of all of them, really.
Good
You could find opportunities too. So like, Natalie, I know you can't talk about this one, but you're starting to find these opportunities in the market where the market either gets spooked and starts to misprice equities. And so you could look at like companies like Semler right now, and they're below net asset value. I mean, I think that the net asset value of the Bitcoin's like 465 million at current time, and I think the market cap is sub 400.
434.
Like you start to get these mispricings that happen in the market, and that creates opportunities in the space. I think you're going to start seeing investors getting smart and rotating capital between all the companies because now you're getting to more of a standard valuation framework. So you've got to look at what's happening with each of the individual companies. And, there's going to be all these stories that rise up and, there's always nuance to each individual company. But now that you can compare them against each other, and because investors are becoming much quicker in their reactions, you start to see them taking advantage of mispricings that happen in the market. So when I see any Bitcoin treasury, and particularly a leveraged Bitcoin equity that's trading below its net asset value, I start to get interested because I know what the core value of the balance sheet is already. And if I'm looking at zero credit for any core business value at all, and if I think Bitcoin's going to be on a long-term up trajectory, that becomes very interesting to me. So it's those types of mispricings in the market that I think make this space so interesting now that we have more companies. We used to all focus on one because it was really the only one doing anything of interest. But now that we get to differentiate and we can actually build portfolios and rotate capital amongst different investments, that's starting to make this area really fun.
Well, Ben, thank you so much for mentioning Semler. We have this very aggressive Bitcoin accumulation plan. I can't share obviously everything about it, but would love to hear if Tim or Jeff have anything else to weigh in on your thoughts about Semler Scientific specifically.
Having the healthcare exposure is fantastic, right? I know they were like one of the best performing stocks from like 2016 to 2020. Yeah. And now they've kind of been this zombie zone for a couple of years and now adopting a Bitcoin treasury strategy. But that the really unique unlock here is like having Bitcoin as power on your balance sheet provides optionality. And at a point in time in the future, if you saw a market opportunity, and I have no idea what the healthcare market really looks like, but if there was an opportunity to go swallow a 5 or 10, 20, $15 million company to help improve your operating performance in your operating business, or, as a strategic acquisition buy more Bitcoin and put it on your balance sheet, companies that are operating on a Bitcoin treasury strategy are going to have more opportunity to do that, right? You could go buy a company with equity, and that's a possibility. Like now equity becomes a currency. Your equity of your company becomes a currency, and that equity of the company is a valuation of what your Bitcoin is doing and what it can do on the horizon. So yeah, I mean, this whole space is going to be fascinating to see how each one of these companies just is going to be able to do things differently. And like having the different diversified exposure is going to be incredibly valuable.
Yeah, absolutely. And I know you two are on the board of asset management, right? And so I know that all of us, we're like looking at ways, how can we accumulate Bitcoin? How can we do it in a very accretive way? Tim, any thoughts on the space as well?
Yeah. So first, quickly on Semler, I had the opportunity to meet a few people that are very close with Eric and have worked with him for a long time. And they point blank told me he's one of the top minds, one of the most intelligent investors they've ever met in their entire lives. So that really struck me as, what more can you say? All of the points about having an operating business through market cycles, I think is a huge advantage. As just a regular person listening to a podcast, I hear what Jeff is saying about, risk return and, for someone that's maybe like, well, am I either excited about the stock or I'm fearful or there's this risk. And then, Ben very eloquently saying about, rolling capital from one thing to another. It's like, if you just zoom out, right? If you go to michael.com, you go to hope.com, and you literally just read the sentence, which for a lot of people, even myself to a certain point, it's like Bitcoin is a bank in cyberspace for people that don't want to run their own hedge fund. Some people like can't wrap their mind around that, but if you really just take all the fancy words out of it, it's like, what do you want to spend your time on? You can just buy Bitcoin. And the one thing I really appreciate about Jeff and Ben and the True North team is on many of the live streams, they say, you know what? The first thing that you do is you study Bitcoin, you buy Bitcoin, you put it in cold storage, you own Bitcoin. So I think it's maybe easy to miss if you don't listen to it's hard to listen to every podcast under the sun. Yeah. But I think this group has done a great job at saying, study Bitcoin, buy Bitcoin, and then we can talk about all of these other things. So it's like, if you're an individual, you can buy Bitcoin, you can be excited about MicroStrategy, now known as Strategy, Metaplanet. I'm publishing soon the latest interview with the Smarter Web company. They're the fastest growing Bitcoin Treasury company in the world right now. Okay, but at some other point in time, it'll be another company. So it's like, okay, if you're an individual and you have cash, do you want to speculate or trade, which are words that you hear people use to describe the retail market? But if you are a family and you have a lot of money, then you call yourself a family office. Or if you have a lot of money as a family and you get all your buddies together, then you might call that a venture capital firm or a private equity firm. And you can, you have your analyst team, and right, it's all of these things. So where do you want to spend your time? If you want to actively invest, then maybe this is something that's really interesting to you. But if you just want to not lose your money, then you just buy Bitcoin.
Yeah, that's exactly what Semler says. If you just want to keep your money, buy Bitcoin. Well, as we start to wrap up, I would love to just hear, your final thoughts and maybe your vision for True North, as obviously more and more Bitcoin Treasury companies are going to come onto the market for you guys to evaluate, to chat about, to discuss. So where is all of this going?
Yeah, this group and this community is evolving really quickly. I mean, I didn't anticipate it to necessarily grow this fast, but it is a good problem to have. We have this abundance problem. We've got an abundance of eyeballs that keeps wanting to watch what we're doing. So this is evolving really quickly. I think there's a lot of opportunity to continue leading research on the securitization of Bitcoin and how this market opportunity is evolving. And that might be, all of these other, independent research people kind of falling under the True North brand, or having like research teams fall under the True North brand of like, this is True North approved, True North approved content. And then you have some collective power as a research environment or a research entity, putting really good information out into the marketplace.
Well, you mentioned Roaring Kitty, at the start of this. That was really a people's movement. What's cool to see is another kind of retail-driven, bottom-up movement that can actually make an impact on the markets. And these companies need to pay attention to the retail side, to the community, because it's a force, right?
Yeah, it's the digital transformation of investor relations, but it's also the digital transformation of just information flow.
Yeah.
And as the world becomes more abundant, right? We now have Bitcoin, an asset where you can store your energy without decay. And the world is not used to that, right? Like the world isn't used to an asset where you can store your energy without decay. So with that in mind, the people that are going to be successful now own their own time. And maybe they don't want to work in their existing, 9 to 5 rat race job that is just driven by fiat incentives. And that's, pushing other people to work on the Bitcoin network and communicate in the Bitcoin ecosystem and ecosphere and build on Bitcoin. And that's what I'm incredibly excited about, is this future of decentralized hope pushing forward because people are owning their own time.
Yeah, it's everyone collaboratively coming together and building conviction around this idea, which is Bitcoin, which is the most powerful idea that we've seen in a very long time. And through all the opportunities that we've built with True North and through all of us individually covering things, I mean, like I found myself, I'm the chief investment officer at Swan Bitcoin now. So every part of my day is Bitcoin. It's Bitcoin Treasuries with these guys at night talking about this on True North and trying to get as good of information out there. And then during the day, it's trying to help people, store their wealth in Bitcoin. And this is one of those communities you find that's really rare because it's one where everyone's supporting everyone else.
Yeah.
Right. There's not a lot of egos in Bitcoin, which is one of the nice things that you find here is everyone's collaborative in the way they're sharing ideas. If someone has an opposing viewpoint, it's not an attack, right? They try to help you think differently. I've changed my mind on 1,000 things along this journey because someone was willing to send me a DM and go, have you thought about it this way?
Mm-hmm.
And I think it just creates this really cool environment where people want to learn, they want to expand the way they think about topics. And we've all got areas where we have our own expertise to bring a voice to that discussion. And it's through podcasts like these, it's through live streams, it's just through interactions in the chats underneath tweets.
Yeah.
And having that community around, it really energizes everything that you're doing. It just makes Bitcoin the best place in the world to be working right now.
Yeah, and it's really good to see differing points of view come together and be able to discuss it and come to some sort of conclusion, and everyone can sort of decide for themselves, right? But we don't have enough of that discourse in the greater public arena. Everyone's just fighting amongst each other, so it's really nice to see when Bitcoiners can have healthy debates. Well, thank you guys so much. I'm bummed that we're out of time, but this is really fun. I hope we can do it again. Congratulations on all the success of True North, and we'll have you back on soon because I'm sure there will be many more corporate Bitcoin treasuries to come and some cool stories from the ones that exist now. So thanks, guys. Appreciate it.
Thank you, Natalie.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. Sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.